Hello, trading is closed on November 19th, 2019. Let's go over our calls. Look for the pattern with the early low. This is it. Tomorrow's pattern also has the early low. Said the commonest thing was the gap and promptly move outside the day's range. We did that. Here's standard rule. Commonest thing, gap and fast move outside the day's range. Strong resistance at the day's high. We said if the gap were under this low, the call was kind of easy because of resistance. I said if the gap were over the high, all bets were off because we overcame resistance and we have to wait for the early morning pattern. Well, the early morning pattern was a rejection of the breakout to new highs as we dropped in a straight line and trapped all the people who were long overnight. This pattern usually has an early low and a late high. Typically, it's a rally day. When you don't rally, it leads to lower prices. When each high is lower than the prior high, it leads to lower prices. It's very negative. Negativity goes away if we gap up and overtake this high, which is what the bulls have to do. Futures are down right now, and based on some other things I'm going to say, I don't think they have it in them. Absent such a gap, I think we'll see lower prices tomorrow. When MEJT does its thing, when the market consolidates, it said the move over this yellow line was false, we retrace. Said this drop was false, we retrace. Said the rally was false, we retrace. Said this rally was false, we retrace. So ultimately we trade lower, even as the market went up. We did that. We almost always get more than this. We almost always get more than we got from the ultimate sell yesterday. So I look for lower prices. Gapping up and taking this out kills the call. We're no longer using to mark stuff. We did point out today was bar 13 of a sequential sell. The pattern's actually recycled, which means you start to count over again. Sometimes these work anyway. If it doesn't work, you say, well, I told you to recycle. And if it works, well, I told you so. There's bar 13. Well, let's look at what we have. We showed this yesterday. It's actually truer today than it was yesterday. If you magnify it, this line is a nicer fit. You also can see the perfect fit of the Fibonacci target of the prior consolidation. So we stop right at resistance. And as I said, if you go in a straight line up to resistance, usually resistance wins. If you're going to beat this resistance, you have to have a gap over it. And even though we open with a gap, there's no gap visible now. If you don't hold it, it doesn't count. Our long-standing opinion was that this consolidation is that this is a consolidation, it isn't an impulsive move, and that somewhere it's going to be the end of wave blue B. Now, how you count this, there's all kinds of ways, as with any consolidation. But at some point, you'd have to have blue C down. So we'll see why today's high, along with a number of other highs, is a candidate. One of these should work. Well, we had this as the count of blue B. It doesn't work anymore because magenta C is no longer equal to magenta A. What you really want is a pretty simple direct count where everything fits. So I'm going to switch to this one. You have your magenta A, your magenta B, and your magenta C. And if you take your magenta C, you can see how it equals magenta A, and this A equals that C, and it's kind of a pretty pattern. You can take this A and get your C right on the nose, and the same thing works with the A of red C and the B of red C, everything. Well, it fit when I did it before. Let's try it again. much better. So we've got Fibonacci a balance right at this high, but that's not all we have. Our friend Gann, he liked to divide things into eighths. So let's divide the whole rally beginning with this 0.0 to today's high into eighths. You can see 8/8 would be today's high. 7/8 is this low. 6/8 is here. Let's try it again. 8/8, 7/8, 6/8. 5/8 doesn't yield much, but a half. 4/8 yields that 2007 high right on the nose. You go to 3/8. Now these are monthly bars. You can see how 3/8 is a consolidate. It's a resistance support area that lasted years. You can see how 2/8 is right on the nose. Can't get much better than that. And if you go all the way down to 1/8 back in 1991, you get a resistance support area that lasted over a year. So the conclusion is today's high is a reasonable target of a pattern which goes back to 1991. So if we do reverse from here, and that hasn't happened yet, the drop could be very noticeable on the chart, which is a euphemism for saying if this holds, we get a sizable reversal. So Wednesday's pattern has the early low. Doesn't mean you won't gap up. Today's action is negative unless we gap and promptly overtake today's high. Lower prices should print. Doesn't guarantee a lower close, but the failure of the normally bullish pattern to close near the high, rejection of the breakout, resistance at the high, all causes to be on the lookout for a significant reversal here. Can't really be totally confident because other numbers work too. Can't be totally confident he undercuts some prior lows. But if we do undercut prior lows, which hasn't happened yet, we should be in a very significant decline for wave blue C before the rally resumes. All we need to do is hold this and we get lower prices tomorrow. All we need to do is undercut some prior lows. We get lower prices that are very, very tradable and are very noticeable in a long-term chart. And that's today's call.